Right, good morning, good afternoon, good evening, wherever you are. I hope you're doing well. So, I actually recorded this topic this morning and posted it on YouTube, but I got feedback from just a few viewers that watched it earlier that the quality was not great. Now, I understand because I did um, my intention was to get it done quickly and then upload it because I felt or my intuition was telling me someone needs to watch that video today. So that's why I did it very quick to post it. So I used Zoom to do the recording. I actually have a software for recording, but I did use Zoom because it's quicker. Um, but now I'm using my professional uh, recording software, so the quality should be better. Okay, so I'm gonna go over the topic that I discussed, and the topic was how to trade the crosses. Okay, so when you want to trade the crosses, the best thing to do is to actually look for the strong pair versus the weaker pair, right? So if you're looking at all the futures market, all the futures currencies, and then compare which one is strong and which one is weak. So in this video, I'm going to show you how you can do that, comparing which one is strong versus which one is weak, and then you trade that. So for example, if you're looking at the futures market, the currencies, and then you see that euro is strong and then pound is weak, that will give you euro pound, and then you go and buy euro pound. If yen is weak and Aussie is strong, you go in and you buy Aussie yen, right? You can just look at price action on the Aussie yen. Okay, you can look at price action on the Aussie yen and just trade Aussie yen like that. But in my opinion, if you come onto the futures market and actually see that there is a there's a strength difference between Aussie and yen, it kind of gives you confidence in your trade that because Aussie is weak and sorry yen is weak and Aussie is strong, your trade is going to move in your direction. Okay, so let's jump into it. Now there's three ways that I do this. The first one is was inspired by ICT when I was doing the mentorship back in 2018, and he described it as looking at the dollar index and looking at the other currencies to see which one is strong versus which one is weak. And I think by now everybody knows that lesson. You look at the dollar index. If it's going up, then look at the other currencies, so euro, pound, Aussie, New Zealand, Japanese, CAD, and Swiss. You look at that and then see which one is not going down, because if Dixie is going up, then by default everything else should go down. So the 8, 1, 2, 3, 4, 5, 6, 7, they should all be going to the downside. So if Dixie is going up and one of the 7 is not going down, it doesn't necessarily have to go up with the dollar index, but sometimes it will just consolidate. Okay, that's all you need. So if dollar is going up and then the one of the currencies here stays in a consolidation or goes up with the dollar, then that pair will be considered as a strong pair or a strong currency. Okay, example right now, let's say Dixie is going up, right? Apart from what is happening now, it's been going up, and then you look at the other currencies and then you find out that British pound has been going up as well. Okay, if you look at British pound for the last 4 days, 1, 2, 3, 4, it's been going up, and for the last 4 days this has been staying in consolidation, but overall it's been going up. And then you look at pair like, let's say, euro, in the last 4 days you can see 1, 2, 3, 4, we've been dropping. Okay, so that gives you an idea that euro is weak and pound is strong. And if you go on to euro pound, you're gonna see that. So for the last 4 days, if I go on to the daily, 1, 2, 3, 4, up from here, right, you can see price has been dropping. Okay, so that's the standard way ICT shared back in 20 when I was doing my mentorship anyway, and I think it's all on YouTube, so I don't get into trouble sharing this. And if I do, I apologize, because I do respect ICT, and it's because of him that I have all this knowledge. So great respect to the man. So that's the first one, by looking at the Dixie and then looking at the futures currencies to compare which one is strong versus which one is weak, right? And you can do that easily by sometimes looking at the candles. Okay, you can see by looking at the candles, we've been dropping, but on British pound we did find support here. Okay, and I'm gonna give you a little bit of insight into how to, because in the first video I did kind of not touch on a lot of things, because I want you to work a little bit to get more, but I'm gonna say a little bit more in here. Sometimes you can forecast when one is going to be strong and when one is going to be weak, all right? And for example, if a currency trades to a PDRA, aka Japanese yen, right? You can see I have an alert here. JAPY traded to a monthly fair value gap in here, and on the weekly we traded below this down candle, which is a topic that I'll kind of bring out in maybe soon. I'll discuss about market maker buy and sell models, right? I'm gonna give you some secrets in market maker buy and sell model, but essentially what price did was traded into OTE, right? So over the weekend I did my analysis and I saw that we are going to touch OTE. So as price was going to touch that level, okay, I anticipated some strength to come into JAPY. So for 2 days or 3 days, you will have strength in the Japanese yen. So this is another way of me using the same idea of looking at Dixie and looking at the other currencies to determine which pair is strong versus which one is weak. So on, I think it was Monday here, my price touched that and then started rejecting. That particular day I didn't do anything with it, but the next day, because we had a volume imbalance in here, I forecasted that they're going to trade in there. So on Tuesday I took a let me see, Monday, Tuesday, Wednesday. I don't know how that's possible because today is Thursday. Okay, I think Monday was a bank holiday or a holiday, so there was no trading on the futures market. Anyway, when price hit this, you forecast that it's going to gain strength. So that particular day I did euro. So that was Monday was here, and that was Tuesday. Oh, I'm getting confused with the dates because it's missing one candle, but anyway, I think, let me check Monday's date. Monday was 29th. Okay, so it's missing 29th candle. Alright, so Tuesday price hit that and then started rejecting. When I saw that, because the euro was yet to trade to the PDRA, which was a fair value gap on the actual currency, the euro dollar. There's a fair value gap somewhere here, and price was yet to trade to it. So when price did hit that and it was rejecting. At the same time, all I did was go on to euro yen, and that was that trade I took from up there. So I shorted up here to come and attack previous week low, right? How did I know that this was coming in? Of course, higher time frame did count because there was a level up here, but more importantly, the futures was hinting that there was going to be strength in the Japanese yen. The Japanese yen, right? So by forecasting, by using price action, you can forecast when there is going to be strength in a particular futures currency, right? So another example would be why I'm buying Aussie yen today, actually yesterday, right? If you look at Aussie, that also traded to a PD array over here, weekly rebalancing, yeah, okay, and then as it did that, right, I forecasted that this was going to trade up here and then reject and resume going lower. It's not ready to turn around. I'm anticipating a seasonal buy for yen, but it's not ready yet. So it's going to trade into this volume imbalance and then reject and go lower. So yesterday, as this was going up, I highlighted that we're going to get weakness today and strength on that today, right? And then you can see that on the Aussie yen. And that's what you get. Okay, so another way to do it is by using price action to forecast when one is going to be strong and when one is going to be weak. The first one that I shared is just by looking at the price action on Dixie and then looking at all the other pairs individually, comparing it to the Dixie to see which one is doing the opposite of Dixie and which one is either consolidating or doing the same thing with the Dixie. So if Dixie is going up, which one is going down, and which one is consolidating and which one is going up. The one consolidating and one going up will be considered as a strong pair, and then the one going down will be weak pairs, and then you trade those crosses. So example, if GBP is going up and say Aussie is going down, then pound Aussie is a buy. If GBP is going up and Japanese yen is going down, comparing it to the dollar, pound yen should go up. Okay, that's the normal way to do it. The other way is by forecasting. Forecasting means that price is going to trade to a higher time frame PD array that you are aware of, that if price trades to that level, is going to give you a rejection. If that's the case, you are anticipating that there's going to be a rejection, hence that pair is going to give you weakness. So as an example, if price trades to this level, okay, we are in a market maker sell model, so price is going to go down, but in here it might be strong, but it's going to a PD array that will drop down again. So you can forecast that Japanese yen is going to be weak when we touch this level. So that particular day you are bearish on yen, and then you just find a pair that has not traded to a PD array. Hence, let's say for example, let me put British pound. Oops, not that. Okay, British pound, and let me see the date here. That was the 26th of April. 26th of April is here. Now, looking at this and that, the British pound was still bullish. We have not taken out a swing low yet. So price action wise, this is gonna go and make a new high, whilst price action wise, this is gonna drop. Okay, so that on its own, by using price action, gives you an idea that pound yen should go up. So if you look at that particular date from the 26th, right, from the 26th going, let's go to pound yen. So 26 going will be, let's remove all of that, 26 here. Okay, look at the move that transpired after that. I actually got into this one instead. I traded the long on this one. Okay, so by forecasting the price action, you can know ahead in time that there is a strength coming into a particular pair. Okay, so that's one way. The second way of doing it, and by far, I like using this to forecast. Now there's a website that actually gives you this kind of information. It's called Finvits. Like I said, someone needs this information today, hence you are very lucky, my friend. So this is the website. It's called finvits.com, and you go to Forex and you go to performance, right? And then over here it gives you the performance relative to 1 day, relative to week, month. I like using day and week. I don't use month, so I use these two. When I'm forecasting that a pair is going to be weak that particular day, like today, notice the Japanese yen is weak. Now if you had looked at this yesterday, Japanese yen will be up here. Okay, Japanese yen will be up here, strong pair. So I use the futures market to anticipate this chart that you see here. I knew today JPY was going to be weak. Why? Because of what I shared with you. I knew today Aussie was going to be strong. Why? Because of what I shared with you. They traded to a high time frame PDRA yesterday, or I'll say the day. On Japanese yen it was yesterday. Aussie was on Tuesday, right? So strength was gonna come into Aussie, and you can see that here. Okay, and you can change it to a weekly, and then you can see which one is strong and which one is weak. You can see the British pound. Notice where the Japanese yen is. Now this one is going to change over the course of the week and come down because it's going to be bearish, because it's traded to a PDRA, volume imbalance, on a daily. So the weakness has started here. Okay, so that's another website that you can use if you don't want to do the analysis on this. But I highly recommend you do the analysis on here and then check on the website, because obviously they do know something, but it's like it's not anticipated on the website. The one I'm showing you, you forecast it, you can see it coming. The one on the website shows you after the fact. Okay, so it's of no use. Of course, if you scalp, yes, that can help you, because today you can get a long. Actually, during the London session, price traded to a fair value gap on the 15 minutes time frame and then short up. So if you understand what I'm showing you, you can use this for London open trading, right? Right. So that's the forecasting. Now the main one that I wanted to share, trust me, they're all good. You just have to choose which one you like to operate. I use all of them depending how I feel and what I want to do. This one here, okay, this is it's a price chart that you mostly not have it unless I give you this code, and I will drop this code underneath the video that I'm going to drop on YouTube. What you do with this code is you're gonna go to your search and then you paste it here, and then once it pops up, right click and then add it to your favorites. So you're gonna add it to your, I already have it, so it's not gonna let me add it, right? But if you don't have it, it's gonna ask you to add it to your watch list. There you go. So you can add it to your watch list. Okay, and then you always have that. Now what you do with this is this is the average of all the futures currencies, right? Euro, pound, CAD, Aussie, New Zealand, Japi, Swiss. Okay, that's the average. So meaning, if you look at all the futures market currency, the currencies, right? this is how they're supposed to be moving individually. So example, let's put euro. Notice where euro is right now. Notice where this is right now. We have a low here, and then we have a low here. We have a low here, and we have a low here. So we are still within some sort of a dealing range, right? This is how all the others should be, because this is the average. So euro is like this, pound should be like this, Aussie should be like this, New Zealand should be like this, Japanese yen should be like this, CAD should be like this, and Swiss should be like this. Should be trading above this low. Okay, this one here, because this is the average, so it should be trading above that. Because obviously they are all not going to do that, this gives you an insight into knowing which currency is strong and which one is weak. So if I go on to any of the 7 currencies and I see one trading below this low, okay, I see one trading below this low, by default that that currency is weak, because the average shows that they're supposed to be trading above this low. Okay, and if any currency is trading below that low, that currency is weak. Hence, euro can be traded against whatever currency that is trading below this low, because euro is showing you that it's strong simply because it's respecting the average. You can also look at maybe New Zealand, and if New Zealand is trading below this low, you can trade the euro with the New Zealand, buying euro New Zealand, right? If we look at Japanese yen and it's trading below this low, then Japanese yen is weak. You can trade euro yen for long. Okay, so that's how I use this right here. I look at the price action, comparing the highs and lows to so I'm comparing the average highs and lows to each individual currency highs and lows. And the one that did stand out in May trading, or I would say mid-April to May trading, was this range. So this high to this low, back to this high. Most of the other currencies were doing, or they were trading below it. So if you look at this, that was on the 10th, and that was on the 10th of April. Price respected that, price respected that. Now if you go on to, let's say, Aussie, right here, I still have it there because I did the teaching already and the quality was not good, but that traded below that, right? So when that traded through it, you look at euro, you could have gone long on euro Aussie when we went below this low, because that is showing you that euro is stronger than Aussie. So if you go to a pair like euro Aussie, you will see, let's go to the daily, right? You see right there that move to the upside, because euro was stronger than Aussie during that time, or all this while. Okay, by comparing the highs and lows on this index and then looking at each individual currency, the highs and lows will give you a strong pair. So the ones that will be respecting whether the high or the low on this will be considered a strong pair. So if I look at this index and I see a low, and that low is being respected on the index, that means it should be the same on all the other currencies, all the other 7. So anyone that is not doing that, that particular currency is considered to be a weak currency, and then you can trade the other pairs against that one. So for example, like here, you could have traded euro Aussie, British pound at that time was here, so that 10th, right? You could have traded pound Aussie. So if you go to pound Aussie, pound Aussie is here. You can see big move, dealing range, high low, gives you more confidence to buy this, Why? Because you're getting the hint over here. Now trust me, you can just simply go here and say, okay, price is making higher highs, so if it trades to discount, I'm gonna buy. But once you have this behind you, the confidence goes over the roof. I have no doubt in my mind that this is going to go up. I have no doubt in my mind that this is going to go up. But sometimes there are some traders that don't focus on things like this. So this movement here can scare people to not buy. This movement here can scare people to not buy. But with insight like this, it gives you confidence to, this is a discount relative to that range, just buy it. Discount relative to that range, just buy it. Okay, so that's the other way to kind of look for your strong pairs against a weak pair. And then long term, right, you can also look at it from a long-term perspective by comparing highs and lows, long-term highs and lows. So right now this is being respected. British pound is way above, so British pound is very strong right now, right? So I'm actually in a pound, not the weakest, but I did see price action on CAD that CAD was not going to be strong. Let me show you what I mean. CAD is going to attack this low and it's trading inside a fair value gap, so that's another forecasting there for you, right? It's trading inside a fair value gap. From fair value gap, you're gonna go and seek liquidity. So I forecasted that this is going to be weak, and the strength on this, right, is going to sustain because there's no fair value gap, so price can keep going up, right? What that translates to pound CAD. Pound CAD is here, and you can see this morning pound CAD is flying. I actually wanted to buy here yesterday. It missed me by a few pips, and I jumped in this morning. Okay, so that's how you can use this. So for long term, this low to this high is being respected. If I go on to like yen, you will see long term yen is weak, but yen will wake up. Okay, so get ready. Mid-June or probably the second week of June, yen is going to wake up and outperform most of the currencies. So stay prepared for that. And that's a free tip. Right now yen is weak. Okay, so we are buying every yen out there. Aussie is also weak, but Aussie is also going to wake up. Okay, it's waking up. I have too much in my head that I want to share, but I'm limited because I'm still in the, I think the 10th. Yeah, we are in June, so we are in the 10th month in my mentorship with my few students that I have. So there are certain information I cannot share because some people are paying for it. So once they finish, then maybe I can share. Okay, so long term this one is weak, but it's also going to wake up, right? Just like yen is going to wake up, but for now it's weak. So long term you can keep buying like euro Aussie, pound Aussie. Okay, and let's look at the CAD. That is the low, that's the high. So CAD is also strong, right? Let's look at the Swiss is also strong. So the weakest pair are these three, 1, 2, 3, and then the strongest pair are 1, 2, 3, 4. Okay, but even all these 4 being strong, you can look at price action and forecast a weak one among them, which is what I did earlier. This one here. Okay, it's trading inside a fair value gap. we are yet to attack this liquidity here because we had a break in structure. So that's a pullback, and it should complete the fractal by taking out this low. So I think this is just a pullback to come and attack this, trade somewhere here, and then maybe another pullback. Okay, so by using price action, you can forecast weakness even in those long-term strength. All right, so that's the other way to use the futures market to determine which currency pair out there, the crosses that you want to trade. Okay, this is for the crosses, not the majors. Okay, so once you've done this, what else can you do? You can also use the last one, which is by using pure price action. So when I say pure price action, it's without the wicks. So the open, high, low, and close is being plotted on a line chart format, and then you can use the line chart format to do the same thing, comparing the highs and lows. So you can change this to a line chart, and then I can compare the highs and lows to come to that same conclusion. Now, if you use the line chart, you will get more accuracy, but I don't really need accuracy. I just need direction. I need a strong pair against a weak pair, and then I'll go on to the currency itself, and then I'll do my price action analysis on that currency, and then I'll trade that. Okay, so you can use the line chart to do the same thing, but I'll leave this particular one because the other three that I shared earlier, I did go into details. The same idea is here. You just have to manipulate the highs and lows. For example, over here right now we have this, so pay attention to that. Okay, so when price action was here, this was nowhere compared to where this was. That's the difference. Okay, so that will kind of hint that this pair is weak. Plus, it was trading, if you look at the candlestick, it was trading in premium, basically. So even though they both went down, this pair would have been considered as a weaker pair at that time. So that was 8th of May. So 8th of May, if you go onto any CAD pair, you will see CAD being weak, right? And you can do that by maybe selecting pound CAD, Aussie CAD, New Zealand CAD, that particular day going forward. So a pair like Euro CAD, right? During that day, let's go and do it because I want to show you. The Euro CAD, 8th of May will be here. So during that period, you come here, you do your price action analysis. Price is coming down into discount relative to this range, right? So I'll be hunting for a potential buy idea down here, and I'll get that right in here. Okay, I'll get buy right in here. Okay, and you can go through like all the CAD pairs. Okay, and then you will see, show you another one, 8th of May here. So going forward, break of structure, buy in, buy. Okay, that's how you do that with the lines. You can use it for intraday trading as well by simply dropping down to H4. I use this for intraday trading as well. I use both the line and the candlestick, right? Let's go. So I use both the line and the candlestick to do intraday trading, just comparing the highs and lows and forecasting. Just the same thing I did on the high time frame, you do that on the H4. I don't go anywhere lower than the H4. Okay, so if I'm intraday trading or day trading, I use the H4. Okay, and trust me, you just have to do a bit of studies. You will be shocked what you find just by comparing the futures market like this, using the index and then the individual currencies. All right, so hopefully you did find something out of it. I will drop the code right in the video description, and you can use that in your trading view. All right, if you want to learn more, I think I only have 3 months left till I finish the current mentorship that I'm doing, and after that I will come back on YouTube, but it will not be mentorship level. It will just be me sharing what I think price is going to do, and that's probably about it. I don't know if I'm going to do another mentorship. It depends on the number of people. Usually I just like a few 30 students, not more than 30, because um, everybody wants to trade but no one wants to learn how to do it. Okay, and it does require a lot of effort. You have to put in time, you have to stay disciplined, and not everyone has got that. And some people say they do, but mostly they don't. That's why I don't open my door to everyone. When you want to learn, I will question you, and then based on your response, I do have the ability to see if you are serious or not, and that's when I will actually include you as a student. If not, I'll just let you watch everything that I have on the YouTube, which is okay, or you can go and learn somewhere else. It's entirely up to you. Okay, guys, so hopefully you did get something out of it. Enjoy. My next video that I'm going to do, I'll be kind of going through market maker buy and sell model. I know everybody knows it, but there are certain things that I have found that is very helpful if you get to know. So I'll be sharing that in my next video. So stay tuned, and I'll see you guys later. Peace.